third quarter earnings from Levi Strauss shined a light on a cost-conscious consumer after the denim retailer slashed its full-year sales outlook after struggling to attract customers at department stores and big box retailers. For more, we're joined by Harmit Singh, Levi Strauss Co. CFO and Chief Growth Officer, and Yahoo Finance's Executive Editor, Brian Sozzi. Harmit, always a pleasure to grab some time with you, especially after earnings here. I wish we could start off by talking about this Kenzo and Levi's collection here, but we got to talk about this quarter and particularly the outlook here too. And you and Chip had said you're focused on long-term levers within your control, actions you're taking during the third quarter to really begin to drive some improvements. Where are you seeing some of those improvements start to come through, and what other levers do you think you need to pull?
Good morning, Brian and Brad. Good to be here. Thanks for having me. Overall, the quarter was mixed given the macro uncertainty, but there are lots of things that are really working for us. First is our direct-to-consumer business, which is our stores, our e-commerce. Our direct-to-consumer business was up double-digit on top of high single-digit growth last year. Our international business grew and outgrew the company. E-commerce grew 18% on top of 16%. We exited the quarter, July, August, positive. So as we think about the levers, what we're really focused on is controlling the controllables. In the U.S., we also grew market share, men's, women's, and among the 18 to 30-year-olds. And so overall, there are lots of factors working for us. Unfortunately, our wholesale business in the U.S. and Europe was down, and offset the growth in DTC. From that perspective, our view is consumers are resilient. There is pressure in the U.S. For consumers who are earning between $50,000 and $100,000. That's showing up in wholesale. From that perspective, I took a call 35 years ago when I started my corporate life, never to talk about weather, good or bad, but it's been an unusually warm summer. I was in the UK a couple of times, and it was really warm, and that does have an impact, on apparel purchase, especially in wholesale, where most of what we sell is men's and women's bottoms. But our DTC business, which is a representation of more of a head-to-toe look, think of the light denim shirt that I'm wearing, is where the growth is. And so as you think about holiday season, we're really focused on a pipeline of innovation. We're bringing that to bear. Consumers still shop and love, brands they can trust. They're being a little bit more discretionary on what they buy and where they buy, but they love brands that offer consumer experience. They love brands that bring newness and relevance, and brands that offer price value, a good price value equation. And that's what we are. As we look into holiday, we're cautiously optimistic, but we did bring guidance down because we missed revenue in quarter three. We beat expectations on profitability, but we took revenue expectations down and indicated that our EPS would be to the low end of our range that we'd guided a quarter ago.
Harmit, Brian here. Good to see you. I think you're really focusing on a very key topic here in the economy today. We have a very strong jobs report, really stunned everybody on the street. More than 300,000 jobs created in this country. People think the economy is doing great, but you're really sending a different message. Those families earning $50,000 or less are struggling. Well, then how do you solve that from a Levi's perspective? Do you have to start promoting products to get these customers a new pair of jeans that they may clearly need?
Yeah, so it is, a tale of two. Is a tale of two worlds. You have the, low income to moderate income consumer under pressure. They have to take decisions, and they're being a lot more discretionary. Our view is when they shop, they want to shop with brands they can trust. They want to shop with brands that are offering relevant products. And so we bring that, and brands that give good price value equation. What we have done in quarter three, and it started being implemented by our customers in the US, we took 6 of our 120 fits, and we did reduce the prices to make our products and our price value equation a lot more attractive. And then with innovation and the pipeline of newer products, I think that brings a lot more relevance. And so, we're offering, to the consumer really what he or she wants. And that, I think, for brands like us that continue to grow market share, will bode well for the longer term.
Harmit, Shana here. Good to see you again. Going off of that, some of the challenges that you are seeing, the fact that you need to rely a little bit more heavily on promotional activity. How big of a headwind specifically has been the repayment, the restarting that we're starting to see of student loan repayments? How big of an impact do you see that being on Levi's, at least in the short term?
It's difficult to predict, Shauna, from our perspective, so we're really focused on what we can control. The good news for the industry and for us is inventory levels, and we mentioned this in quarter three, inventory levels, for the company at the end of quarter three was up only a percent, better than what we thought. Trade inventory, which is inventory in our customers, is at a better spot. In fact, very close to 19 levels, and that should, we're hopeful that should help, reduce the levels of promotions. A year ago in quarter four, because of high inventory levels and the consumer being under pressure, promotion levels were higher. We're expecting promotional levels to moderate with better inventories, and brands like ours really offer good price value, and new relevant products make the difference.
Harmit, I'm seeing more people out there wearing jeans that are not necessarily flattering on me, but I love it for them. Why not? And it's the baggy or the return of the wide leg pant. I know it's a perfect fit for Brian Sozzi. He does a lot of squats over the weekend. I do perhaps half of that. So all this considered, when we think about that trend, that shift back to the wide leg jean, how is that now priced in, factored into the Levi's story, and where you're even reallocating inventory for the coming quarters?
Yeah, we led that trend, Brad, and it was just before, the pandemic, broke. We started the loser fit trend, and we're leading the lower rise trend. Yes, you're right, and I applaud you for following fashion. Our women's business, even in U.S. wholesale, was up. So we're leading the trend on lower rise, baggier, looser fits. Our boot cuts are tracking really well. And, and now we're really focused on owning the head to toe denim. So we're, we're expanding into skirts, into dresses, and really product that she really wants, from that perspective. So being on top of trends, being agile, is what a DTC-led company does. And so that's why we're, taking a hard look at our go-to-market calendar, which was built for a wholesale business, and trying to see ways we can make it a lot more efficient and a lot more faster.
Harmit, to be clear, I'm not banging out 25 squats in Levi's jeans. I know you would like me to. I just wanted to clear up any confusion for our viewers all over the world. But while I have you, in your earnings release, you did put a line that you're reviewing your operating model. So if I am an investor in Levi's here, and I'm not, but if I was, is there $50 million or more in expense savings in this model that you think you can remove?
We said we're reviewing our operating structure, and the basic, idea is we believe we can be faster, more agile, more efficient. I talked about reducing our go-to-market calendar. I believe we can drive more productivity in our assortment. We have a long tail. To your specific question on dollars, I'm not going to give you a dollar number, only because we have said that we will talk about the impact, which we think is material, and it will impact positively our results in 24 and beyond. We said we'll give it, when we report Q4 earnings at the end of January, early February. But overall, the outcome we believe is stores that are more productive and profitable, a supply chain that's more agile and efficient, cost structure, that is in line with revenue expectations, and inventory turning a lot faster. We have a goal as a company to get to operating margins of 50%. This only solidifies that goal and gets us there. And so I think just stay tuned, be patient, The two times that we have done it before in the last decade, the savings have been material. And so history is on our side.
One region that really seemed to outperform, Harmit, that was China. And I think that surprised a lot of the folks that I connected with because of the slowdown in the Chinese economy. What are you seeing with that consumer, and why does it appear they want Levi's jeans?
Yeah, broadly, Brian, our Asia region, was really strong. Asia grew in the mid-teens on top of strong growth a year ago. I was in Asia and in China a couple of months ago. The consumer is resilient. It's a younger consumer. Our brands are operating really well, and direct to consumer is a higher piece of the business. In Asia, we also have Performance Cool. I talked about the weather. Performance Cool is lighter denim, is a lighter bottoms, trucker and shirts, and that's really performing well. With global warming, there's no reason why we shouldn't be selling that in the Western world. Specifically to China, smaller piece of our business. We have a wonderful team on the ground. The consumer generally is sound, and China is where we sell our premium product. Think tier 1, tier 2. Think product that's over $200 and really doing well. And so, while we're not back to 19 levels of performance, they're having a double-digit growth now. I think stands well for our brand and our product, and really a shout out to the team on the ground because they're focused on really growing that business, over time.
Harmit, you've had a brand that's been very open or scrutinous to some acquisitions, and rightfully so, to try and enter into kind of new consumer categories as well, whether that's the yoga category, thinking about Beyond Yoga, or Dockers even in that category, and pants, and of course the core Levi's business. Is there another category? I mean, I'm just looking at the front page of Levi's right now in this Kenzo partnership as well, and that kind of triggers this thought of, where is that next opportunity, and does Levi believe that it needs to buy into that or just create more timely partnerships and collaborations? Because collaborations have really seemed like they've taken hold of the fashion industry right now.
Yeah, collaborations are working for us and for the partner that we collaborate with. It's a win-win for both sides. You talked about Kenzo, there's the Crocs, etc. And so we have a very good lineup of collaborations. But to your broader point, we believe, we can be the best apparel company in the world, and that's offering more than just denim. Our non-denim business, grew actually in the quarter, and we're just getting started there. As you know, we bought Beyond Yoga a couple of years ago to get into the athleisure business. That's working really well. Dockers and our other brands, which are about $500 million of revenue today, had a decent quarter, grew, and Beyond Yoga was up 25%. To your question about different categories, as we think about M&A, let me start by saying the organic opportunity in this, in our current brands is huge. Having said that, if you want to be the best apparel company, the categories we really, take a hard look. Besides accelerating our tops and women's, there's the athleisure piece and then the outerwear. I think, our view is when you open your closet in the morning, you should see, a lot of product from the Levi's brands. And as the world becomes a lot more casual, and we are leaders in denim, there's no reason why we shouldn't be the best apparel company in the world.
Harmit, always great to get your perspective and speak with you after these quarterly results. Harmit Singh, Levi Strauss CFO and Chief Growth Officer. Also, our thanks, of course, to Brian Sozzi as well. You never know. Maybe we'll get Brad in those wide leg jeans before next quarter.
Maybe. It's hot out there. I need a lot of breathing room.
All right, we'll see. Harmit, thanks so much.
That. So thanks, guys. Have a good weekend. Cheers.
I'll be sure to take a picture, Harmit. Don't you worry.
Don't send it to me.
That's right. I need to see that. All right. Thank you.
Guys, have a good weekend.